Hello, can you hear me? Okay, let us start concept number 3 relating to PDD or RDD or RBDD. PDD means provision for doubtful debts. RDD means reserve for doubtful debt. RBDD means reserve for bad and doubtful debts. Okay, note down the question. Concept number 3. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two partners, Mr. A and Mr. B, sharing profits and losses in the ratio of 2:2. What is their profit sharing ratio? 2:2. Their balance sheet as on 31st/3/2024 was as follows. Here was is used. It means it is old balance sheet. Balance sheet as at 31st/3/2024. Left hand side capital and liabilities amount rupees. Right hand side assets amount rupees. Capitals Mr. A, Mr. B. Assets and debtors 20,000 gross amount less PDD old PDD 1,000, net amount is 19,000. On 1/4/2024, Mr. C is admitted into partnership on the following terms. Now, the conclusion is that this question is relating to admission of a partner. Why? The term used is admitted. In this question, who are the old partners? Mr. A and Mr. B. What is the old profit sharing ratio? 2:2. What is the old balance sheet date? 31st/3/2024. The date on which new partner is admitted into the partnership firm on 1/4/2024. Who is a new partner? Mr. C. In future, there will be three partners, Mr. A, Mr. B and Mr. C. Adjustments. Maintain provision for doubtful debts on debtors at rupees 1,200. Here, maintain. They are saying that hereby, in future, PDD should be rupees 1,200. What is the old PDD? It is 1,000. Now new PDD is 1,200. They are saying that maintain the PDD 1,200. Now 1,000 PDD became 1,200 means there is an increase in the PDD of rupees 200. So how do you treat the PDD? I think everybody understanding the question. Pause the video, note down the question. Write the question and start the solution. Solution to concept number 3. Revaluation account. Draw the revaluation account format like this. Left hand side, debit side, expenses and losses, amount rupees. Right hand side, revenue, income, profit, gain, amount rupees. In this place you can write particulars. That is also correct. Now 1,000 PDD became 1,200. It means that there is increase in the PDD. As per the American accounting system or accounting equation approach, revaluation account, debit side expenses and losses. Increase in the expenses and losses, debit. Credit side revenue, income, profit, gain. Increase in the revenue, credit. Okay. And when there is increase in the PDD, one account is revaluation account, another one account is PDD account. Revaluation account, because of increase in the PDD is a liability. Increase in the liability, credit. Because of increase in the liability, there may be a loss in the future. increase in the expenses and losses debit. So revaluation account debit to PDD account. But as per the England accounting system or British accounting system, the rules of debit and credit and types of account involved are like this. Revaluation account is a nominal account. PDD is a personal account. Provisions are the personal account representative accounts. So when there is increase in the PDD, there may be a loss. Debit the expenses and losses. That's why revaluation account debit. Increase in the PDD, personal account credit the giver. So that's why journal entry is revaluation account debit to PDD. If you want to solve this question by using the technique, increase in the PDD, write on the debit side of the revaluation account. If there is a decrease in the PDD, you should write on the credit side of the revaluation account. Now the case situation is increase in the PDD, that's why we should write on the debit side. So increase in the PDD, debit side. Revaluation account debit to PDD. New PDD minus old PDD. New PDD 1200 given in the adjustment minus old PDD 1000 given in the old balance sheet. This is step number 1. So what is the net amount of increase? 200. Step number 2. Draw the new balance sheet. New balance sheet as at 1/4/2024. Left hand side capital and liabilities amount rupees. Right hand side assets amount rupees. Capital Mr. A, Mr. B, Mr. C. Because in future hereby 3 partners Mr. A, Mr. B and Mr. C. Debtors, open the question. From the question 20,000 gross amount less PDD, old PDD plus increase in the PDD, old PDD given in the old balance sheet plus increase in the PDD 200 from the revaluation account, that is from revaluation. Now 1000 plus 200 is 1200, 20,000 minus 1200 is 18,800. So I think everybody understanding it. If you are understanding, like it. If you are not understanding, give the comment. Where should I explain more? Where should I explain less? Okay. If you want to understand these questions in Kannada and English, in the YouTube open the Bhagavadi Commerce Foundation. In the playlist, there is a list of different playlist. Okay, you can select from that also. Like, share, subscribe, press the bell icon. Thank you.